One very concerning question every trader asks is, what time frame is best for me to trade? And in this video, I'm going to prove to you that the market has a fractal nature and works the same exact way on every time frame at all. Now this means that the pattern or the structure you see on the monthly time frame, you can see same exact or similar pattern or structure on the weekly, on the daily, on the 4 hour, the 1 hour, the 30 minutes, 15 minutes, the 5 minutes, the 1 minute, the 30 seconds, 1 second. You can basically see the same exact or similar pattern on any time frame at all. You can trade any time frame with your working strategy. So I'm going to prove to you that what you should be concentrating on is to refine your strategy and make it a working one instead of focusing on any time frame that is suitable, because every time frame is actually suitable. Now let's go to the chart and I'll show you some live examples and what we should be looking out for. And before I go on, I have to tell you that the method I use to trade is called wave analysis. So every other thing I'm going to show you on the chart is going to be based on wave analysis. And no, this is not to shift your focus or attention from your strategy or from whatever you're building or from your focus or methodology of trading the market to anything else. It's actually meant to show you that the structures repeat themselves on any single time frame. So however your methodology is and whatever your methodology is, you can still be able to find the same structures, the same opportunities and the same patterns on any time frame at all you choose to trade. Now with that being said, let's hop onto the chart and I'm going to show you what I mean by that. So here we have a chart and I'm going to choose any random chart. Let's go to Euro USD and let's start from the weekly. So this is the weekly chart on Euro USD, and let's even start from the monthly. And yeah, this is the monthly chart of Euro USD, and from here you can see that we've been in an uptrend. We have this, had this pullback, we have this pullback, have this pulling back, and after that we will likely get a correction here to come down, or we'll still get an impulse to break the top. Now before I move on, I have to tell you something so you can have a better understanding of everything I'm going to say here. The basic concept of wave analysis is that the market moves in 3 waves. That's number one basic concept. And the second basic concept is that the market, as it is moving in 3 waves, it makes patterns. And these patterns can be recognizable for any single time frame at all. So now that I've said this, it is going to help you understand everything I'm going to do on this chart right here. So let's go. Now we have this 1, 2, 3. We could still be in this 1, 2, 3. There is a higher possibility or probability that we are still in this 1, 2, 3. So we've had this one, which is the A wave. We are still in the B wave, and from indication we're still in the B wave of the B wave. Now I know this might sound confusing. That's why I said earlier that I'm not trying to shift your attention or focus from what you used to know to wave analysis. I'm just trying to prove to you that these patterns work on any time frame and on any chart and on any instrument. So we are still in the B wave of the B wave. Now why this is the B of the B is because from all these things happening, this is the most corrective part. I mean, this is the most clustered part, and it's coming after this and also pulling back to almost the low of this. So we can have 1, 2, 3 later on and still have this pullback complete this a running flat, and we'll still go 1, 2, 3 up. But this will not happen within a twinkling of an eye, because this is the monthly time frame anyway. So now I'm showing you that if you want to trade this, all you need to do is to have a pending order just above. I mean, for wave analysis traders like me, I'm going to have a pending order above this last impulse, so that if this move is happening, it should take me in. That's it. And this same thing you are going to see on the lower time frame, and I'll prove that to you. So now we have a 1, we have a 1, 2. We will get a 3 very soon. I don't know when it will start, but we're looking forward to this in the next coming years. I don't know when, but yeah, and looking forward to this as well. Now let's go over to a lower time frame, which is the weekly. On the weekly time frame, let's take whatever is happening here. For example, you can see that here we had a 1. You can take this to be a 2, and we had a 3. Had this one, you can take this to be the 2, you have this 3. You have this one, you can take this to be the 2, you have this 3. You have this one, 2, 3, and you have this. You have 1, 2, 3. You have 1, 2, 3. 1, 2, 3, and you have 1, 2, 3 as a correction in the middle of this, and this coming down. So for this, you can also check. You'll see that 1, 2, 3 there, and this 1, and you can see we're in the middle of this, forming the 2, and later we might get the 3 depending on where the 2 stops. So again, from the higher time frame, you see we have a 1, 2, 3, 1, 2, 3 forming, and potentially 3 later on in the coming years. And from the weekly time frame, you can also see that 1, 2, 3 patterns always forms. Now let's go down to the daily time frame, and this is where things start getting a bit clearer. Let's use the immediate structure that's forming. Looking at this, you can see the 1, 2, 3, right? And this has a 1, 2, 3, right? Now, how do you actually trade these 1, 2, 3? Because I believe you don't want to trade the weekly time frame or the monthly time frame because you're not really a position trader. So if you're to start trading from the daily time frame, what will be your trade entry point? Now, depending on how you trade, whether you use limit orders or you use stop orders or you do instant market execution, this will have a major effect on how you enter the market. So for instance, a typical example of a wave analysis trade on this is after we had this impulse, we had this could be tradable because in between this we had this impulse and we had this pullback or this correction. So this can be tradable, and of course, because we had this, we're always looking forward to when this will start. So if you go to the lower time frame, you can see an opportunity that you should have gotten out from this particular trade. Okay, you should have seen a sign that will tell you maybe this is a time to get out of this, and you just get out. Or you can put your take profits just above here so that it takes you out automatically. Now that this has happened, it becomes a major confirmation that we are going to get this, and that this might just be the start of an uptrend. So when we had this impulse, we had this pullback, this becomes a trade. Now remember, we are on the daily time frame. On the lower time frame, like the 1 hour 30 minutes, you should get a correction here to take this trade at least to this top. And if you took the trade from a lower end, you can see it met your take profit, and then it had a pullback. So on a lower time frame too, this will look corrective, and then you're looking forward to, now that it has broken this top, it's consolidating, so maybe we are still going to go up again, and you look for an entry point. So now let's go to a lower time frame, and I hope I get to come back to this extreme. Let's go to the 4 hours. Let's find that should be it, right? Yeah, that's it. So you can see, like I was saying, this was your trade after this 1, 2, 3 and this correction. This was your trade. And if you look at the 1 hour or 30 minutes or 15 minutes, you can see an indication that could potentially tell you to get out of this trade from here. Maybe after this impulse was happening, you could just shut this up and get out. Or maybe you targeted this top and had your take profit there. It doesn't really matter, but what matters is that you got this trade from a lower point and you rode this to this top, and then this happened, an impulse and a flag. So this gives you an indication for wave traders actually that we might be getting this, since this already broke the top, and then this is a trade. So this actually didn't go very far before we start having this correction again, and you could get out, or you could hold it as your stop is somewhere above. But don't advise you hold trades when it is correcting or when it is consolidating though. Anyways, this will all based on your strategy. What I'm trying to prove to you here, remember, is that the market works in a very fractal nature, and patterns you see on higher time frames you can also see on the lower time frames, which work same exact way or similar ways. Now after this correction, this impulse is your trade, and if you want to be on a very safer side, this impulse and this correction after the break of this low is your trade. So this was your trade. If you go to the 30 minutes or 1 hour, you can see this is actually a big trade. Okay, so but the thing you're also going to be looking out for is a completion of that pattern there, which is this. So now that we have this pattern completed, we are looking forward to two possibilities. One, are we going to form this correction, which is 1, 2, 3, and still go down, or are we totally starting an upside? That doesn't really mean until it proves, and the proof came from here, okay, and further confirmed it right here. So from here, you can remember when we were on the daily time frame, I told you could get this trade from a lower time frame, even though I am not advising you get this, because looking at it forming, it looks like a correction that could still go down further. So you wait until after the break of this top. Any other correction would actually lead you into the trade. So let's just say you didn't get any trade, here and here, and you saw this happen. This becomes a confirmation that we could get something similar to this, which was this, especially when it broke this top and started consolidating. So this was your trade, and it broke out. It didn't give us an impulse and a correction to come down. It consolidated, meaning that we can be going up some more. So these right here are your trade if you could get anyone from them, because it's very corrective in nature as it's moving up. But of course, we know that after this we can go up some more, and then that is for the buys. So after this thing here, it formed a major correction again, proving the fact that it can go up some more, and these were trades to catch. Again, this is the 4 hours time frame, and if you go to the 1 hour time frame, you can see these things clearly as they played out and how you could have caught some trades in there. And we had this correction, a 1, 2, 3, and after the correction we're getting this 1, 2, 3, 1, 2, 3. You can see that, right? And then after that we had a 1, 2, 3, 1, 2, 3. Now after that we are getting something like this coming down, 1, 1, 2, 3, a 1, which is a 1, 2, 3. So now the question is, now that we have gotten these things, we can clearly see that we have a 1, we have these 2 right here, which we don't know when it will stop or when it will finish, because it looks like we're getting a 1, 2, 3 here, and if that be the case, this is going to break the low again. So we don't know how far this will go when it breaks the low, but we'll try to get trades as it comes down. Anyways, after that we're going to get this C wave, because we're still in the B wave. We've had the A, we have the B almost completed, and we're going to get the C wave. And if you go to the lower time frame, also on the 1 hour, let's go to the current chart right now, you can see this is a break of structure. You can see that we have this 1, 2, 3, and we're potentially having a 1, 2, 3, maybe have finished and we're still coming down, or maybe not. So whatever happens here, if this is the start of the upside, we will know because it broke this top. So we're still looking to see if this is the start of the upside. If it's actually indeed a start of the upside, then it should form a correction here, because this is the first impulse into a possible 1, 2, 3. So but if we have a consolidation on the lower end of this impulse, we are of course going to sell it some more, and this proves that this will come down some more. But before that, let me continue with the teaching. Now you had this impulse, you had this pullback. I wouldn't advise this, but this flag after the break of that consolidation there proves to you that we could be having something more coming down, and then this is a good one. Pullback, we had this, and we're now in this. So if you check all these time frames and the ones I've done in the past, which is the higher time frames, you can see that there is always a similar pattern forming. It doesn't matter if the pattern takes this shape, or even takes a shape like this. So it depends on where the chart is coming from and where the pattern is happening. That you can easily notice on any time frame you are on. Now let's scale down again to the 30 minutes or 15 minutes time frame. Now let me go to the 15 minutes time frame so you also see. Now this is a 15 minutes time frame. From here you can see we had 1, 2, 3. You can also see 1, 2, 3 here. See this correction, see 1, 2, 3 here. You can see this 1, 2, 3. So this is a 1, 2. You can see 1, 2, 3. You can see 1, 2, 3. You can see this. You can see this. The question right here is, are we still in this whole correction that will go up, or are we finally coming down to break this low? And like I said a few minutes ago, we're only going to know this when either we'll see this form a consolidation here, or we see this move up and come back, or we see an impulse. So an impulse here and a flag will buy, a consolidation here will sell. But note that this consolidation might still be part of this that will still go back up. I mean, where you have a consolidation comes down and still does this. So have that at the back of your mind, and that is where knowledge and experience in the market comes in and has a major role on whatever you're doing. But I think as of this time, I've been able to prove to you that the patterns work exactly on any time frame at all that you want to trade, and all you need to do is not just really to focus on time frame. What is going to give you that profitable trades or make you a profitable trader is not the time frame you are trading. It is actually the trader you become and the strategy you have refined to work for you. So if you go down, let me go down to the 3 minutes, you can also see the fractal nature of the market. You can see this 1 2 3, you can see 1, we're forming a 2 that is yet to complete. So I don't know how long this will stay. For it completes, we could end up having something like this and it still comes down. So that is it. And if you look from the top where we are coming from, you can still see the traces of those 1 2 3 there. See that coming 1 2 3. We had this correction, we had this, so you can safely say we had 1 2 3. So are we going to form another correction here to come down, or are we going up totally? Well, that is what we don't know for now until we are able to see, which of course is happening. But I think by now I am able to prove to you that the market works the same exact way, and the structures you see on the higher time frame can also be seen on the lower time frame. And time frames you trade is not really what is a thing. What is a thing is actually refining your trading strategy and having it work for you on any time frame you find yourself or find a trade opportunity. So with that being said, you can see that what you need to focus on is your strategy. And if you want to know a bit more about wave analysis and how it works, then I have this video for you right here. You can look up that and see what I have for you over there, and I will see you next time. For the meantime, trade carefully and make sure you're refining your strategy to become a better trader.